Hello everyone, and welcome to our next technical analysis review for the Euro US dollar pair. Today is April 23rd, 2012, and we are currently looking at price action on our 15-minute chart. And as you can see, I have this vertical line drawn in, and what this does, it divides last Friday's trading session from today's trading activity, or this week's trading activity. So as you can see, on last week, we closed the week off with a rally in the pair. But on this week, the start of this week, we began to see prices fall in the pair. We began to see this risk-off bearish move in the pair. So then for most of today's trading session, the market was risk-averse, and we see this bearish move in the pair, which is a sign of dollar strength in comparison to the euro. So we saw people piling into the greenback for most of the day, and we saw equities fall. We saw our commodities fall. And this was primarily due to just troubling news coming out of Europe. For one, we had poor Flash PMI data from the Eurozone. And on top of that, we're still having fears over the rising yields in the Eurozone peripheral bond market, in particular Spain. So this weighed heavily on investor sentiment. So we've been seeing prices fall for most of the day. But that's not the only news that was moving the market. Of course, there's increased uncertainty over the French elections, and they had just completed their first round of votes for the next French president, and it appears that the front runner is now Hollande instead of President Sarkozy. So of course, all of this is creating fear and more flight to safety in the market. So on today, we saw the Euro US dollar pair fall 106 pips from the session high here at about 32.11 down to the session low here at 31.05, and now price appears to be going through a correction or retracement ahead of the Asian Open. Now, if you were looking for an opportunity to enter the market, you could have done so on the pullback to this area of supply here around 31.47, and you could have entered a short position on bearish confirmation, and you could have done this sometime after the New York opening bell, and you could have held on to this trade and took your profit when price had reached this psychological zone of support around 3100 or 3105, in this case for about a 42 pip trade. So that was one trade you could have entered in the market on a pullback to an area of supply. So then right now you can see that price had retraced from this session low, and it appears to be showing signs of a potential trend continuation. This retracement seems like it could be coming to an end, and there may appear to be more downside risk for the Euro US dollar pair, but only time will tell. We will still have to wait to see what the Asian markets give us upon their open. But that's it for my technical analysis review for today, and I will be talking to you guys later. You guys have a wonderful day. Get in. Bye.